Welcome to the Investor Empowerment Series radio show, empowering your real estate investing with techniques, opportunities, and information, minus the BS and sales pitches. Now, please welcome the host of the Investor Empowerment Series, Joe Mueller, from the Tough as Nails Investment Syndicate, Joe Mueller.
Episode number 60. Wow. The Investor Empowerment Series radio show. I never thought I'd see the day that I would put out 60 podcasts of me, myself, and I, along with some awesome, super cool guests. Yes, today is episode number 60. Today we're going to be talking about financing options for real estate investing. Last week we had a meetup at my office with a bunch of investors. I think we had about 20 or so people show up. And the topic was, do these 3 simple things to get your business started before the end of the year, essentially, or improve upon your business before the end of the year. One of the topics we talked about was financing options when you're getting started, when you're somewhat seasoned, and when you're an advanced investor. That inspired one of my brokers to actually put together a list of what his thoughts were on financing for investors. I took a look at it and I thought, wow, this is great. I am going to do a podcast about it. So if you're interested in learning more about that broker, his name is Doug Kowalewski. He's been working for me for about 5 years. He helps a bunch of our investors here at Tanis Group build portfolios and sell portfolios and find tenants and find properties to invest in via flipping strategies, things like that. He's been in business for over 30 years, and that is Doug Kowalewski. If you'd like to hear more about him, you can listen back on the Investor Empowerment Series radio show number 16, because he was actually a guest. We got about an hour-long session on my guy Doug. So that said, I'm going to get started. But before that, I want to make a quick note, little self-sponsorship here. Right now, we're offering a property management special. So if there's any investors out there who have some rental properties that are thinking about transitioning them into property management, or perhaps you're a homeowner who is unable to sell their home after the spring and summer market has kind of started to fizzle out here, which is exactly what's happening right now in our market. We're offering a special here at my company. So if you have a property in the Chicagoland area, right now we're doing a $250 lease-up fee for our company, as well as a $100 a month management fee, regardless of the rental income. So typically the way property management works is there's a percentage taken off the top of whatever that gross rent is that's collected. So for example, if you are renting a condo for $1,100 a month, typically that amount is going to be around 10%. So the management company would take $110. If you are renting a single-family house for $1,600 a month, then the management company is going to take somewhere around $160. Typically, it's always over $100. So what I'm offering right now is a fall special. We're trying to offer this to our experienced clients, novice investors, as well as homeowners that maybe haven't sold the properties yet that they were looking to sell this year, or maybe moved up to a nicer home with their family and still have something they're sitting on that they need to sell. Try renting it out. A great way to start your investing career. So again, we're offering a $250 lease-up fee as opposed to a full 1-month fee, which is typically what's due when you're dealing with a broker or a management company to rent your place out. So again, if you're renting a house for $1,600 a month, you typically give away the first month's rent for the broker fees. We're reducing that amount to $250. How we can do that is through marketing off market and getting that property rented out. So it's a $250 lease-up fee. Any property that might be a higher end property, we might have to talk about that because it requires a little bit more attention than what that $250 program will offer. But that doesn't mean we can't work around that. So again, if you're interested, we got a $100 fall management special. This is going to last throughout the end of the year. Today being September 13th, 2017. I'm going to honor that pricing until the end of the year. So $250 lease up, $100 management per month. If you or someone you know may be interested, please have them contact me, joe@tanisgroupllc.com. That's joe@tanisgroupllc.com. All right, let's get back to the show. So, episode number 60. Super excited. Financing options for real estate investors. Real estate investing. We have a list. Thank you, Doug, for putting this together. So, 4 different types of investors we've categorized here. Options for buyers with bad credit and no money. Options for buyers with reasonable credit and little or no money. Options for buyers with some money or assets and good credit. Options for seasoned investors to accelerate their objectives. So, I love it. I love talking about stuff like this. Funding for real estate has always been a huge sticking point in any investor's career at some point. I was just listening to another podcast this morning on my way to the office. A guy who is running a turnkey property management company out of Florida, and he's been funding his business by selling to out of state, out of the country, investors from China and things like that. And he's got such an inpouring of funds from selling these properties. For those of you who don't know what turnkey is, they basically buy a house, fix it up, rent it out, and then sell it to we'll call it an overseas investor. I would say probably normally for a premium, and then they have they've got a local opportunity as well if you're interested and you still live in the States, but they've got an influx of cash coming in. This guy does in particular, and I was thinking about this very topic, financing. So when you've got the machine rolling, even then sometimes overhead costs, staffing costs with employees, material acquisition costs. I mean, just because it appears on the outside that this guy's selling 5 or 10 houses a month or this gal's selling 15 houses a month does not necessarily mean that they're flush with cash either. Because I would tell you, just from my own experiences, it comes and it goes. Anyway, let's move on. So let's talk about options for buyers with bad credit and no money. Let's talk about how to get started with bad credit and no money. First thing on the list, and I love it, taking over payments. What do you think about when I say that out loud? You're probably thinking, yeah, right, never going to happen. Nobody does that. Why not just sell it? The market's too good. Why would anybody be interested in that? Well, the answer is it happens all the time. People will give up their house in return for you paying their mortgage. Typically, it might be some type of a low or no equity type situation because they can't even afford maybe to sell it. Because let's be real, let's break down closing costs here. When you sell a house, you're looking at, what do we pay brokers? Those scoundrels. 5% on average probably. Some of them want 6%. Then you've got another 3% at minimum in closing costs. So you're somewhere, we use a number of 10% when we're calculating out the cost to sell a property. Because after it's all said and done, after taxes are prorated, which is a variable number, of course, after everything's kind of, the ink is dry on the paperwork and the checks are in the bank, it's about 10% to sell a house. So if I'm selling a $200,000 flip, I can expect to walk away with $180,000, so minus 10% of that. Great number to use, by the way. I love using that number. Makes it simple and easy. And if you get a little bit more, if you end up with 183 or 185,000, well, kudos to you. That's awesome. But plan on 10% for closing costs, something that a lot of investors probably don't think about when they're going to sell a property. So let's get back to the topic at hand. You can take over payments on a property. You can do, it's called subject to, which stands for subject to the mortgage on the property. That said, it is not as simple as recording a deed on the county's, at the county recorder's office. In essence, effectively it can be. But there's other aspects of subject to that are important in order to maintain the integrity of that mortgage, to avoid a due on sale clause. There's strategies, there's tactics, things that we're not going to jump into. But a topic that can be educated on, you can educate yourself on very easily. So if you have any questions, again, you can always reach out to me, but we're going to move on. So taking over payments, one way to get started when you have bad credit and no money. Contract for deed purchases. I love this one. I've bought multiple properties on contract for deed. I bought a 9-unit two apartment buildings on contract for deed or land contract style acquisitions. I did have to put down some money. I think one of them I put down 10% on a $300,000 building. And then on the other one, I can't really remember. This was a ways ago. But made payments to the seller for the first year in both of those transactions and then refinanced out of them. And what I was doing was I was fixing up the properties in the interim. So I was fixing them up, renting them out, getting the building stabilized to the point where I had it at like a 90% occupancy, finishing up the last unit, started the refinance process, took me less than a year. It was awesome. Even cashed out some money on the side. Now, I, in hindsight, might have done things a little bit differently because then, the market crashed shortly thereafter these experiences I had. But that's what I did at the time, and at the time it worked. So, taking over payments and contract for deed or land contract to acquire property when you have bad credit or no money. Two awesome, great options. Partnering with a qualified person and or being like the labor guy. Love this idea. I know one of our investors that I'm not going to say his name because he probably doesn't want me to, but he'll know that I'm talking about him right now. He has offered himself up to numerous types of investment opportunities as saying like, hey, I'm basically ready to, I understand construction. I know how to fix plumbing. I know how to do electrical. I've done a lot of stuff myself on my own. And if I don't know how to do it, I've got the resources to get that knowledge or to bring someone in to assist. And he's offered those services up as like his 50% contribution to a partnership. Give that some consideration. It's labor, it's time, or it's money, right? So if I'm an investor, I might not have time to go there and actually manage a project. I'm going to need somebody who does. So it's a trade-off. Consider that as an option. How do you meet people that have those opportunities available? Networking. Podcast. Listen to podcasts. Find out where there's going to be events. Find out where people are doing deals. Go to events. Go to meetups. Go to your local RIA clubs. Talk. Stand up in front of the room and say something. You're not going to get anything if you don't talk. Okay. Another option to acquire a property for an investor with bad credit and or no money might be a lease option type strategy. With lease options, you can quote unquote buy the option for a property, or I shouldn't say that. You can rent a property with the option to buy it and in turn essentially get control of that property. And while you have control of that property, you can re-rent it to another tenant. I know we've talked about this on another podcast that's called Sandwich Lease Option. I'm not going to dive too deep into that one, but before the end of the show here, I will come up with that podcast if you're interested in Sandwich Lease Option. Credit repair. Yeah, start working on your credit. That's a subtitle of this particular investor option, buying with bad credit and no money. You got to start working on it. Go see a credit repair company. I can recommend one if you're interested, joe@tannisgroupllc.com, and get that stuff fixed. They're going to tell you how to use what you have in order to start repairing the credit. Just make improvements. The last option on the list would be to borrow money from someone that you know. Friends, family. In that aspect, you're probably going to be partnering on a deal as well. Essentially, anytime you borrow money with a private lender, it's a partnership, right? You guys got to take care of each other. But in this particular case, I think what we're getting at is you can borrow from, a relative that's willing to help you out. Very slippery slope, I would say, though. Be very careful, especially if you've never done a deal before. I don't want to advocate for somebody to just go out and buy a house that they think is a good opportunity. Please utilize the team that you need to develop in that process. And when I say that, I mean brokers, appraisers, attorneys, the people in wholesalers, other investors, me, whoever, the people in the industry that have been doing it, that are experienced, that know how to buy and sell the property that you're interested in, or the type of the property type. For example, a 10,000 square foot industrial building versus a 1,200 square foot condo. I mean, there's two different property types. Make sure whoever you're working with has experience in that niche before you start borrowing money from your friends and family, because that can go bad. That said, second part, options for buyers with reasonable credit and little or no money. Everything we already talked about. That's first on the list. Love it, Doug. Thank you. Second option, which I love. I was actually going to do a podcast about this, but I realized I just talked about it in episode number 57, I believe. Nope, 58. I'm sorry. Finding deals in your spare time. HUD Home Store. www.HUD Home Store. If you're interested in house hacking, which is when you buy a property and move into it as a live-in type flip, or a multi-unit like a 2-flat or a 4-flat, move into one of the units, fix it up as you go, rent it out. That's called house hacking. That's one of the great things about some of the government-backed lending we have right now. If you're going to own or occupy something, you do get the best opportunities for low or no down payment type options, lowest interest rates. So HUD Home Store offers all types of opportunities in every state that I can see, including Puerto Rico, if you're interested in moving out there. They have a $100 down payment program as long as you are buying a HUD home and you're going to own or occupy it. You can get a loan for repairs. You can get a credit for repairs. You can get a 203K loan. Great opportunities. The USDA mortgage program. I am not 100% familiar with this program. I know Doug is, and one of the other brokers we've worked with is familiar with the U.S. Department of Agriculture loans that are available, but they have no down payment mortgages. There are some stipulations on the size of the city that you're going to be investing in, or buying in, I should say. And again, this would be an owner-occupant program, but the option is out there for no down payment through the USDA. If you are a retired veteran, you've been a veteran of our armed forces, you can get a VA loan. Same type of situation that HUD kind of offers, but only to veterans. No down payment and low down payment type options. You can get a grant from the IHDA. If I knew what that stood for, that'd be awesome, but it's Illinois something, something, something. And it is a down payment grant that is being offered for $9,000. Currently still available. They've been offering it for the last 5 years, every year. When they run out at the end of the year, they run out, but there is still monies available. That said, again, owner-occupant type program. I know we're talking about investing today. So when we're talking about investing, this is more of a house hack type opportunity. I know several investors that I've met through our meetup, that I've talked to, that have called, that have emailed me, that have done exactly this. They've moved into some type of property they want to utilize as an investment. They move into it, they fix it up, and then when they're done, they move out. And they do it all over again. Great, great concept. One option, and we talked about this extensively at the meetup, is utilizing an IRA. This is more straight up investing, private lending type stuff. Find someone you know that has retirement funds invested in an IRA. They don't have to be 59 and a half, which is the age you can actually collect from an IRA. They can just have money socked away in some type of 401k or IRA plan, and they can take that money and self-direct it, which we talked about how to self-direct your IRA or work with the right people that can help you self-direct your IRA back in the Investor Empowerment Series radio show, episode number, I'm looking it up. It'd be cool if I wrote this down in advance, right? Episode number 32, we talked with Mike Todd of IRA Innovations. He is the owner of that company. He started himself. He does self-directed 401k and IRA situations. So if you can take an existing IRA and 401k and push them into a self-directed company that will, or custodian they're called, that will manage that IRA, essentially not manage, but administrate that IRA, and then you would manage it and how you want to disperse the funds. So again, if you've got a friend of the family that's got 100 grand sitting in an IRA doing nothing, or maybe not doing enough, 3%, 4% in the stock market annually or something, or even 6 or 7%, if that would be pretty good for the stock market, you can have them self-direct their IRA through this type of a company, IRA Innovations with Mike Todd, episode number 32, and they can loan you the money at a higher interest rate. Now, you just need the money. So if you're going to end up paying 10, 12%, that's the way you got to get started, even if it's a little higher than that. Consider the cost of hard money, which we're going to talk about as well. But if you can get a loan for 10 or 12% through someone's IRA, I think that's a pretty good opportunity. Another option is to utilize a company like Pathway Financial. We've talked about Pathway Financial on the podcast as well. This is like a referral to old podcast machine I'm doing here today. But Bill Jennings, he's the owner of Pathway Financial. They're a Chicago-based company. They have, let me see, there we go. Episode number 10 of the Investor Empowerment Series radio show, Finding Your Path to Additional Funding with William Jennings. This company is essentially a line of credit development company. So they will look at what your situation is. If you don't have the best credit, they will help you do some credit repair, and they will help you obtain up to $150,000 in lines of credit. Typically, I don't know what their average client gets. I think their average client's somewhere around $100,000, but if you have questions, again, reach out to me. I will connect you with the right people over at that company, Pathway Financial. Shout out. There you go. All right, so let's move on to the next one. And I apologize, I'm looking at my computer screen here as I'm doing this podcast. Options for buyers with some money or assets and good credit. Again, all the options above are potential opportunity for you to get started or to continue to build your investment portfolio or business. At this point, you're probably able to get a standard mortgage. Will the property qualify for a mortgage is the question. Will you be able to get a loan on it? Typically nowadays, conventional financing is pretty liberal with being able to obtain properties as long as the property is habitable. So no broken windows, no holes in the roof, furnace has to work, water has to turn on. Typically, you can get a conventional mortgage. If you're missing, water lines and pipes and they cannot show that there's actually running water in the property, you're going to have a problem. Same thing with heating. If the furnace doesn't function, you will probably have a problem. You'd have to then turn to other unconventional lending, like a hard money lender, which I'm going to touch on next. But again, standard mortgage, government-backed Freddie, Fannie type loans that you can get up to 10 loans through these programs before they quote-unquote cap you out. Cheapest money around, best money around, best opportunities through those properties, or through those loans. Home equity line of credit. Do you have equity in your own house? Go to your bank that you do 99% of your banking at, whether it's where the mortgage is or not, and see if you qualify for some type of home equity line of credit. Great option. You can also get a line of credit from a bank or an asset-based lender. And I think this is similar. You're going to have to pledge some type of asset to get some type of line of credit loan. But I know in my business, before the before the crash, I'm dating myself, but before the crash, I was able to go to my bank. There's no collateral and nothing other than, I forgot what they called it, but it was basically a signature line, which means I signed for it. And that was, I was the guarantor and my business was the guarantor. But I think I got a $100,000 line of credit from the bank I was banking at the time, just for the sheer fact of asking. And we have, positive cash flow and things like that, income coming in. Hard money. Let's talk about that because I touched on it twice already. Hard money is a great option. Typically, the rates are going to be 12 to 14, maybe even 18%, I've heard. Sometimes they charge points up front, which a point is 1% of the balance that you are borrowing. So if you're borrowing $100,000, a point would be $1,000. So, your average type of I say average, there's no such thing because they all are different. You got to read through the paperwork. You got to check out what the fees are. You got to do your homework with hard money lenders. I can recommend 2 hard money lenders off the top of my head that I know I've worked with investors that have been successful and happy with the results, which is Renovo Financial out of Chicago, as well as Barnett Capital out of Chicago. Again, I'd love to connect you guys with that. That's something that I can get a benefit from as well. So if you are interested in learning more about hard money lending, please contact me and I will hook you up with the right company based on what you're looking for. The other option I have is my contacts at Lending Home. I've talked about them before. I've done little sponsorship commercials about Lending Home. I really like working with Lending Home. Lending Home happens to also be the company that Mark Faustrom from our previous podcast, episode number 59, was talking about pretty extensively. I've helped him get 2 loans through Lending Home. I also get some type of a benefit from that, so I get a small fee as well. I manage that process when I'm working with Lending Home, so I make sure it gets done. And to be honest, just to recap, I mean, he still ended up putting somewhere around 20% down, I think. I can't remember off the top of my head. The rate was somewhere in the 11 or 12% range. There is a couple points tacked onto it, but the process, I mean, again, they're the type of company that once you've done multiple properties, their rates go down, the points go down, the opportunity gets better. So just something to consider as an option. Another tool in the tool belt, if you've, expelled too much cash out there, you don't have enough to find another, or to buy your next deal, yet you found another deal, keep some of these resources in your back pocket. Give me a call, we can talk about it. Okay. Other option is joint venturing. So again, we're still talking about options for buyers with some money and good credit. Joint venturing is awesome. I love joint venturing. I joint venture with investors pretty continuously throughout the year, every year, whether it's fix and flips as well as buy and hold type properties or wholesale type situations. Dan Clarton and I and Cheryl, we joint venture on opportunities. Chris Davis from the podcast, we joint venture on opportunities. These are ways to grow your business while sharing some of that responsibility. You're going to have to play a role, whether it's you're the one managing the project, you're the one bringing the money, you're the one finding the deal, maybe a combination of those, but you can't, in most situations, you're not just going to walk in there and collect some portion of something without providing some type of benefit to the other people involved in that joint venture opportunity. Consider that as a great option once you've got your feet wet, once you've got some experience, or you've got good credit and you can supply the credit needed to get that hard money loan for another investor when you believe in the project that you're about to invest in. That said, I'll say it again for the 7th time. If you have any questions or concerns or a deal that you need evaluated, you can always contact us here at Tanis, Joe at TanisGroupLLC.com. All right, so that covered options for buyers with some money or assets and good credit. Now, options for seasoned investors to accelerate their business. I love this, but I've never done it, so I can't speak of it highly. We did have a guest that spoke about it, but crowdfunding. I know there are several platforms out there right now that will crowdfund individual deals, multiple deals, can do multiple deals at once. We did have a guest on our show, episode number 8, crowdfunding with Jillian Hellman of Realty Mogul. I'm not going to make this a pitch fest about which company is better than the other. I don't know because I've never done it, though I have worked with some investors that have worked with crowdfunding. I know a couple out there off the top of my head. So if you're interested in learning more, please give me a call. Shoot me an email, I should say, and we can talk about that as well. Again, another option, a self-managed real estate IRA. So as you grow your investing business and you have some capital, start your own IRA that we talked about. I talked about the podcast number 32 with Mike Todd of IRA Innovations. Sock away the $5,500 a year that you can for a Roth, or start a self-directed 401k. It's got to be in the name of your business. It can only be your husband and wife and no employees. There's a bunch of stipulations that I am not going to speak to. Again, listen to the podcast, contact Mike if you're interested. But in a self-directed 401k, you can put up to $18,000 per year socked away into this, and it can be a Roth as well. So a Roth, self-directed Roth 401k, or 401k Roth. I don't know the order it goes in. But again, so that is after-taxed money that goes into the account you can utilize for investing in real estate. Now, again, there are stipulations on your level of involvement in those type of projects when you were to use some of the methods we've talked about earlier, whether it's the down payment for a hard money loan or something for a joint venture when you're contributing 50% of the cost. You are limited at the amount of exposure you can have to that investment. So I don't want to speak too detailed on that because I don't want to misdirect anyone, but the opportunities are out there. I personally have a self-directed Roth, sock $5,500 away per year into it. I have a small amount in there, and you can utilize that money for something. So recently used it on a joint venture and handled the down payment of a purchase. So I'm going to get a return on that investment. I'm going to grow that balance. It will be tax-free. Again, I can't tap into it until I'm 59 and a half, but it's a great opportunity. So start building that Roth that Roth program, whether it be a 401k or a self-directed IRA. Next one, establish a capitalized corporate entity. Whew, wow. Big business, boys and girls. You're going to have multiple investors. You're going to be raising capital. You're going to be maybe syndicating a deal, finding multiple investors to put up, let's say, $100,000 each to buy a 50-unit apartment building, et cetera, et cetera. Those are some of the aspects you can utilize when you've grown your business, when you've got some contacts. So basically what we're referring to in this instance, when you're a seasoned investor and you're looking to accelerate your business, you could start up a secondary LLC, third, fourth, fifth, whatever LLC or some type of corporate entity, and you can capitalize it from other investors based on your experience. Obviously, you need to put together a business plan. You need to have a pro forma. You need to figure out what's going to happen with whatever it is that your project is going to be, whether it's fix and flipping, buy and hold, or anything else under the investment umbrella, because people aren't going to want to lend you money unless they have a full understanding and trust of what you're doing. That said, I don't want to get too detailed on that either. It's just an idea. Questions, you want to brainstorm it, shoot me an email, joe@tanasgroupllc.com. Commercial line of credit. At this point, you've got an established business. This is something kind of like what I referenced earlier when I called it a signature line of credit. If you have a successful business that has a track record, 3 years of positive income, taxes, things like that, you can stop in at your local commercial bank that maybe you have a couple loans with. Maybe I would recommend having a banking relationship with them, and you can get a line of credit. So you might have to collateralize it, maybe not. There are options out there that'll do that though. Last one on the list is a CD type program. I know might blow a couple minds right now because, well, at least it blew my mind about 6 months ago when I first found out about it. But there are programs out there right now from smaller community and local banks that allow you to do what they call a CD loan program. So essentially, you're going to put money in a bank account at a bank. Let's call it $50,000, and they'll hold it in a certificate of deposit for a year, gaining whatever that prime interest rate is. The 1 or 2% you're going to be getting on that money. But the fact that you have money in a bank, some of these banks will actually allow you to take that and borrow up to 4 times that amount for an investment property for a 6-month term. Specifically, there's 2 bank contacts that I have that are handling the Chicagoland area that, if you're interested in, again, contact me. I can give that out to you. I don't want to just throw it out there right now because I'm not sure what type of volume they're ready to handle or things like that. But there are opportunities where you can put money at a bank in a certificate of deposit, and then they will lend you out 4 times that amount, which you can use for the acquisition and rehab cost of that project. You just have to keep that money sitting in that CD during that time frame. And typically it's a 6-month term, so you've got 6 months to either sell your fix and flip opportunity or refinance it and keep it and move it into your buy and hold portfolio. Hopefully that's some helpful information for you. And again, questions, please feel free to contact me. So just to recap, that was options for seasoned investors looking to accelerate their investing business. So today, we talked about a bunch of stuff. I kind of just, puked all over this microphone for the last 34 minutes, trying to give out some good information. I think the biggest key take home is there are opportunities out there if you're brand new or if you're an old salty vet. There are ways to improve upon your business. There's ways to increase your capital. There's ways to double your income depending on what you're looking to do. I was just listening to somebody speak the other day, and they were talking about how they had a job with a pension, and they were about 5 years into this job, and they were already counting down the years, of how many years were left that they had to stay at that pension, or stay at that position in order to obtain their pension and be at the right age in order to collect it. And the conclusion of the conversation was, do you spend the next 20 or 15 to 25 years of your life at a miserable job, potentially, just to obtain a fraction of what your income was? So if you were making, $100,000 a year, maybe you'll get 50%, depending on the pension structure, 75%, which, $75,000 a year obviously is nothing to sneeze at, but any type of income per year is nothing to sneeze at. But after the conversation or the speaker was finished, he concluded that if he were to just buy 2 rental properties per year for the next 25 years, which was the duration that he thought he was going to be working, he would end up having, $500,000 in monthly income, especially after appreciation, pay down of loans, paying off of mortgages. It was a pretty impressive discussion. So that said, keep these things in the back of your head. There's always ways to improve. There's ways to get started. This is episode number 60 of the Investor Empowerment Series radio show. Thank you for being a part of the podcast for the last 60 episodes. I do appreciate it. Thanks to Doug for his input on this particular podcast, inspiring me to do to speak of the topic. I'm looking forward to seeing you guys back at episode number 61. That said, I'm done. Please rate me on iTunes. Give me some good reviews. There's some on there that's getting better. I need some more. Google Play, Google Plus, whatever that is. YouTube, Stitcher, anywhere you can find me. Twitter, Facebook. Give me some likes, whatever. All right. See you around. Bye.
Thanks for listening to another episode of the Investor Empowerment Series radio show. Be sure to tune in next week for another empowering episode. We welcome your feedback, so please rate us on iTunes and Stitcher, and visit us at www.investoремpowermentchicago.com or TannisGroupRealty.com.